And good morning, ladies and gentlemen. This is your webinar host and Senior Market Analyst Jose Tormo speaking, broadcasting to you live, doing a quick audio and visual check. If you can hear me loud and clear and see the broadcast on your screen, please go ahead and type in a yes or A-OK. And we will be getting into the pound breakout prediction trade planning session in just a few moments. Please stand by. Thank you. All right. Once again, thank you for your confirmation, everybody, and thank you for joining me here this evening. Well, it is evening for some of you here, so hopefully everyone's here having a wonderful opportunity here to take advantage of these markets, for the markets take advantage of you. And again, as we're now in another trading week, we're now underway. It's Tuesday, April 25th, 2015. We're going to be talking about the pound breakout trade planning session. So intricate details today. What we'll be showing is what the targets are for this pound breakout prediction as established by Joshua Martinez, and how to get to those trading targets overall, and how to go about taking advantage of these markets for the markets take advantage of us. So what I want to do here is open up a couple of currency pairs and talk about this, and then decide how to get to those trading targets by utilizing simple strategies that are easy to understand, easy to execute, easy to obey, and that work, because at the end of the day, it's all about simplicity and also consistency in keeping trading opportunities the way that makes sense to us as traders. We have to realize that there's many different ways to make a lot of income in this market. There's only one real way to lose it all, and that is to trade without a protective stop loss in these markets. So the first thing that I want to go ahead and do is, if you're not familiar with the pound breakout prediction, it is basically the currency pairs are four pound pairs that have been selected: pound Canadian, pound New Zealand, pound Japanese yen, and pound Australian. And what we're looking for is an overall breakout based off of what we've seen with Article 50 and the whole Brexit scenario and what's been taking place here. So we're anticipating bullish breakout movements based off of these pairs. So what I'll do is I'll go ahead and show you what the market's done so far, also where the markets are right now in relation to the targets and how to get there. So the first thing I want to do is highlight the actual target price points on the monthly time frame where they've been selected, and then we'll break this down to a smaller chart and talk about some trading opportunity here. So we'll start off with the pound Canadian here, and the pound Canadian's target price for the pound breakout prediction is the following. Let's go ahead and color this green. It is the following price point. It is at 1.8147, and that is the pound breakout prediction target price. And as you can see, that is because of a past level of support in the market that we are anticipating to become a ceiling of resistance there. So this is for the pound Canadian currency pair. I'm going to go ahead and put this in here so you can see it and take a screenshot of it. Pound breakout target is for the GBP Canadian going to be 1.81470. And what I want to do right now is I want to go ahead here and have you take a screenshot of this, because right now what we're doing is we're going to be talking about how to get to these trading targets with smaller time frames to therefore give you more of a trading plan, as opposed to just speculate and talk about why the targets have been established and what's going on. First and foremost, to show you why the targets have been established is because Joshua Martinez has always been looking for long-term trading predictions, and he's helped us out with these types of predictions. So the targets are based off of support and resistance levels Josh has seen. And so if you have this on your screen so far, if you've taken a screenshot, type in a yes, and then I'll go ahead and move on to the next pair. And then once we confirm all four currencies, price point targets, we'll go ahead and begin to do some nice analysis for you to get you taken care of and to help you begin trading proactively towards these opportunities if you have not done yet so already. So pound Canadian, as you can see, the breakout target is at 1.81470 right there. We've got pound New Zealand here. Coming up next, let's open up the pound New Zealand, and to give you some confirmation of where the price point is for the pound New Zealand, let me go ahead here and click on the price point. It is, the pound New Zealand is at 1.8868. And as you can see, that is also here a past level of support in the market. It is anticipated to become a ceiling of resistance. As for the GBP New Zealand, it is the price point of 1.88680. So far, go ahead and type in a Y or a yes if you have this screenshot as well. All right, excellent there. And then we'll go to the next pair here to kind of go ahead and go down the line. Let's go with pound Japanese yen. And on the pound Japanese yen, the price point target is at change the color here, 163.04 is the price point there, and as you can see, it is because of a past level of resistance that became a floor of support in this market, and from the floor of support, we are now anticipating it to become a ceiling of resistance here once again. So the pound Japanese yen the GBP JPY is 163.04. Go ahead and let me know by typing in a Y or a yes when you have this pound Japanese yen currency pair identified. All right, wonderful. And then last but not least, the fourth pair of the pound breakout prediction is going to be the pound Australian. And the pound Australian's price point here, the target to go after would be the following. It is 1.8293. And there is the pound breakout target. And again, it is this level of support in the market that is anticipated to become a ceiling of resistance there. And as you can see, the market gave us past levels of resistance that became a floor support, and now support. We're looking to become resistance here in this particular area for a pullback. So let's go ahead and draw this out here real quickly. Pound breakout target for the GBP Australian is going to be the price point here of 1.8293 in this market. So once we take a look at essentially what all this is going after, is what's this market planning on doing, right? And how are we going to get to these targets? But let me know by typing in a yes when you have the pound Australian target price, and then we'll go ahead and begin to break this down a little bit more simplistically on smaller time frames, because these markets have already begun to move and the currencies have already begun to take off, nicely in this direction. So traders have been making a lot of pips based off these movements. As you see over the last 2 months, we've seen some big movement here taking place on these pairs in those intricate directions. So the cool thing about this is that now we have the price established of where we want to go trade towards. Now, a little bit more difficult thing would be, where to get in, where to get out, how to get paid, how to go play. I want to show you a couple different ways here to take advantage of this, because it's going to be very simple, but yet it's also going to be an opportunity for traders to kind of have an eye-opening experience as to this market. Although it looks like it's going straight up, it does wave along the way on smaller time frames, and those waves are going to be important for something that we have now available to traders called grid trading. And grid trading is going to be an opportunity to get you into the market at a better price point. It's going to be able to diversify your risk. It's going to be able to give you better entries into the market, and also help you to break even and make some income while the market goes against you at times, because let's face the facts, we're not always correct on our analysis as far as the entry points are concerned. So what time frame do you trade normally that is best for you? A 2 hour, 1 hour? You know, what would you like to see here based off of these movements and how we can take advantage of it? Because I want to go ahead and break this down here to the 1 hour and 15-minute time frames as well. Okay, awesome, excellent. Okay, so let's go with 1 hour and also with 15-minute for the 4 currency pairs. So let me go ahead and open up a new chart for the Pound Australian, 1 hour and 15-minute. Pound Canadian, 1 hour and 15-minute. Pound Japanese yen, 1 hour, 15-minute. And Pound New Zealand, 1 hour and 15-minute. And so now let's go ahead here and tile these. We've got Pound Canadian, and Pound New Zealand, Pound Japanese yen, and last but not least, Pound Australian and Pound Australian. So today, what I want to do is I want to reward you. I want to reward you because I believe that everyone here who has been attending these webinars and has been learning and has been benefiting from this is going to be, you know, in a great position to start making some healthy, substantial income. And, you know, our promise to each and every one of you is to make 2017 your most financially rewarding year ever. And we want to make sure it's a no-brainer for you. So I'm going to do a lot in my power here to help you. And what I'm going to do is I'm going to keep this simple in 2 different parts. I'm going to show you how to get from the 1 hour time frame analysis wise to these targets. And then what I'm going to do is I'm going to show you how to grid trade with this. And also, on the 15-minute time frame, I'm going to show you a cool little strategy here using my man versus pip system that can also help you out along the way every single day in these markets. So just like grid trading can do for you opportunities in this market on multiple time frames, I also want to help out those that have my man versus pip system. First of all, how many people in this room do not have my man versus pip system? Type in the word no if you don't. I want to show you a cool little way to take advantage of it, and you know, just a simple strategy. But again, it's going to be something here that is, you know, it might not be the strategy for everybody because it's going to be a European session strategy, but at least you'll know that you can use it 24 hours a day and also in the European strategy for a scalping methodology. So let me go ahead and put on the system on the 15-minute time frames here real quickly before we get started here. And then we'll come back to them here before the webinar is up. But essentially what I want to do is I want to reward everybody here for that and how to take advantage of it. But I'll show it to you after we talk about the grid trading strategy, because the grid trading strategy is a wonderful strategy. It's going to help you take advantage of these markets, whether the market's going against you, for you. It's going to be pretty awesome. And we'll see how this works, right? Okay, so give me 1 second. And Alan, I just sent you a message. If you received it, Alan, type in a yes just to confirm. Before I move forward, I want to make sure Alan received my message there. All right, Alan, just follow the rules in the message I sent you, and I'll take care of you, bud, okay? All right, so let's talk about this here. We've got the target for the pound Canadian. So one of the things that we got to do is keep it simple, right? And by keeping it simple, we're going to just right-click on the pound breakout target price point of 1.81470 and hit the word link object. And by linking that object on the pound Canadian now, okay, I'm going to go ahead here and open up the 1 hour time frame and begin utilizing, you know, techniques and skills to get to that price point. Well, here's how this is going to work, right? To to keep things easy to understand, easy to execute, easy to obey. Here is the pound prediction breakout target for the pound Canadian. We're getting closer and closer to it. Okay, so it's going to be a prediction, no more, pretty soon, because it's going to be fulfilled, and opportunity is going to be taking advantage of this. So in this particular instance, what we got to focus in on is keeping things simple, and this market's been making higher highs, higher lows. So let's draw a trend line here to ensure that we're on the right side of the charts. And by utilizing our smart trend lines, what we're doing here is we're keeping things very, very simple by understanding that the market has trend lines and trend opportunities here to capitalize on. And we can even draw some inner trend lines as well. As long as the market stay inside the inner, outer, and long-term trend lines, we'll continue to gravitate naturally towards that pound prediction breakout price point. So on the 1 hour time frame, if we're going to do this with Fibonacci's, automated fibs, right, this is how this works. Now, the reason I want to show you the difference between just regular technical analysis and grid trading is because of how powerful, you know, the grid trading methodology can be for you. So let me go ahead here and show you Fibonacci's, because this is how we analyze the market normally. We'll take, you know, smart Fibonacci's, draw them out, and see what the market does here. And as long as it gives us the automated Fibonacci's, as long as the market keeps on doing what it wants to do here, we'll continue to see how this market works. And here's how this market has performed here so far. We've got on our hands, true or false, the up ABCD wave movement right now based off of the 1 hour time frame automated fibs, right? So that's true. So in this case, this is going to be the strategy that I'm going to show you with MAM versus pips. I'm going to show you two different strategies with MAM versus pips because, and then the grid trading. So the reason why is because there are times when, you know, you don't have the opportunity to trade a swing like this because the market, right, it's giving you a wave and it's retraced to a C and now it's climbing, so you don't know where to get back in. Grid trading, right, because there's no retracement yet, is going to be fantastic because it can help you get involved in a trade, and if it pulls back, it'll size you into the market beautifully. That's a no-brainer. People that follow that strategy are going to be losing very, very little in the market. If anything, it's very difficult for them to lose when they trade this route because equity management plan. Now, I'm not talking about placing multiple standard lot trades. I'm not talking about placing multiple mini lot trades. You can do that, but you control the lot sizes in the movement. So the first thing I want to do here is I want to show you this in two parts. I want to show you this with the regular technical analysis, and then I want to show you on the 1 hour time frame for the pound Canadian with grid trading, so you can see the difference. And those of you that are already signed up can get very, very excited about that because it's going to be a fantastic opportunity for you to start making some serious pips. Okay, and so let me go ahead here and tile these. Well, I'm not going to tile this one yet, but let me minimize that. Here on the technical analysis, we see the wave of the market. And this wave of the market here is essentially telling us that on the 1 hour time frame with our analysis, we've got our A, we've got our B, okay? We have identified a C pullback so far, and the market appears to be wanting to head to the D extension. There's the pound breakout prediction. So the pound breakout prediction is quite far away. There should be some waves along the way, but before this pound prediction breakout target is hit, right? Pound breakout prediction. And yes, just so everybody knows, okay, everything I'm doing today with this pound breakout workspace will be available for everybody today that that ends up at least speaking with their account reps today. And I'll mention that a little bit later in the webinar, but just so you know, yes, I'm going to be sending it to them. And I want to make sure that you're all taken care of on that aspect. But we'll talk about that more in great detail, okay? So here's how this is going to work. Sam says, Jose, for those who have purchased the grid trading course, you know when it would be available? Yes, it's going to be available right before the class, which is just mid-May, which is right before the actual class goes live. So you're going to be getting it right before the class starts, and your account rep should have more details on that. But it's going to be an awesome opportunity for you. So would you agree that the 1.6 of this D extension, as long as the market stays above the trend line, is logically to be hit well above and beyond advanced than the pound breakout prediction is? Yes or no? Yes, right? So we've got here from the live market, we got about 300 pips to go to strike that D extension. It's a lot of pips, right? Now, yes, Gerald, the 80-20 rule can be in play. Absolutely. This market, as you can see, came down, U-turned before the 236, popped up above the B high, came back down to the boundary, and is now taken off. But it still has not come down deeper than the 382. This is a huge possibility that the market can break out bearish and fall to the outer trend line, right, before U-turning and climbing back up. Okay? So in this particular scenario, what I've got to find out is once we get that counter trend line break of the 60-minute time frame. Let me delete this real quickly. What I mean by this is once we get the trend line break that took place here, okay, how do we begin to take action, right? Do we just place a trade here and risk, an arm and a leg because of the 80-20 rule? No. We mark off where the D extension is, okay? So let's mark that off. It's at a 1.774, I believe 44, right? No, 1.77474. And so that's the D extension of the 60-minute time frame. And these are little increments along the way to help us take advantage of a couple hundred pips at a time. How do we get there would be the question. Well, in this scenario, I'm going to give you the opportunity to check out how to get there via your grid trading. Okay? Because with grid trading, here in this particular scenario, how many of you look at this and say, I don't know if I should get in here or not because what the market retraces and I don't know what to do? Having a wire, yes, that makes sense. Right? And that's the honest truth. You don't know. The train's missed the station. I don't know how to get in. So what we're going to focus in on here is let's take this D extension. Let's link it, okay, to the 60-minute time frame that I've got. But if you want to take a screenshot of this 60-minute time frame, go ahead and let me know if you want to. If not, like I said, we'll talk about it in a little bit. But here's how this is going to work with the grid trading methodology. With the grid trading methodology, the same chart. Okay, let me open up the same charts, the pound Canadian 1 hour time frame, got minimized right here. Same chart. What we're going to do now is that since we have our D extension established, we're going to go ahead and only use 500 bars of memory right here, so we can go ahead and figure out a formula. Okay, and by formula, what I mean is how many, where does this market continue to gravitate towards? Because the reality is this. When you're looking at this type of methodology, this type of trading methodology, it's going to be easy to understand, easy to execute, easy to obey, because the reality is typically the market revisits the same price points 5 to 10 times via retracements and extensions. And in some occasions, the same price point is revisited over 20 years. So what grid trading does is it takes advantage of that concept. And the reason that this happens is because of imports and exports, right? So if we believe the market's going to rally 300 pips, okay, then let's go ahead and mark off that rally of 1.77474, which is right here. 1.77474. Okay, that is the D extension there of the 60-minute time frame. So true or false, we believe the market's going to climb to 300 plus pips to fulfill that target. Yes or no? Now, this is the live market price right here. Okay. Typically, we always say, hey guys, we don't want to buy at a sell high price point. We want to wait for the market to retrace and buy low. Well, okay, not always will you be in front of your computer at a buy low price point. Not always will you be in front of your computer when the market's giving you that type of trade setup. So if I believe this market's going to rally 300 pips, right? Well, there's different scenarios this market can rally to get there. If you think about it, this market can do several things to get there. It can go straight from this price point, rally, retrace a little bit, and extend. True or false? This market can go sideways here before climbing and taking off. And then this market can also retrace, okay, before climbing. So the reality is we need to figure out how to take advantage of these markets before the markets take advantage of us. If I got involved here and the market goes against me, I can make my money back here, here, and here, and not even have to go to my 300 pip limit and still make 300 pips via the retracements. How many of you would love to have that type of option So if the market does go against you, when it waves, you can begin to make your money. And then if you want to continue trading to the north, you can then reset your grid and continue making more pips. It's the concept that you need to understand. That's why it's so powerful, okay? Because we've been set. You know, Josh said it best. You should never be punished by getting stopped out if you know the market direction and then see the market go your way. And when investors do this, it's very difficult to lose, okay? And this was a type of trading environment that actually Gary Fickard. A lot of you know Gary Fickard. Yes? Everybody know Gary? Gary would trade this type of methodology here when he was managing money a couple years back, and I saw very, very incredible results going after just a small amount of pips. So imagine the amount of pips you guys go after now. But again, it's a mathematical equation we're going to find out now to scale into the market appropriately. And if the market goes against you, okay, you'll then be able to add to the position appropriately so you can take advantage of the waves of the market or the grid. So what do we do here? Well, we see the target price that we're going to go after. So to figure this formula out, it's, and again, I'm going to lay it out here for you, but again, here's how this works. A couple different steps to figure out this formula. Step number one is use 500 bars of memory on your charts, okay? Step number two is going to be to, let's see here, measure highest and lowest point on any time frame. So in this case, we're using the 1 hour time frame. Step number three would be to measure the distance between the high and low of that time frame in pips. And step number four is going to be to multiply that distance by 3. Step number 5 would be to then divide that number by 2. And step number 6 would be to divide that number by 10. So when done right, you have established the distance between the levels, okay, of the grid for that time frame. Tap in a Y or a yes if that makes sense, and just go ahead and let me know when you see that. Okay, so let's make it a reality now. We put 500 bars of memory, so it doesn't go any further back than 500 bars. This is the 500 bars of memory opportunity. So now, this is obviously the highest point of the market right here. This is the lowest point of the market right here, okay? Let me put this D extension up here, color it red, of the 1.618, which is the 1 hour D extension. So here's the highest, okay? And again, you're going to be taught all this in class because you can do this on a daily time frame, you can do this on a 15-minute time frame, any time frame, ladies and gentlemen. How awesome is that any time frame you can begin to trade levels in the market? Not just hourly time frame, but if you're a 30-minute time frame trader, if you're a 15-minute time frame trader, if you're a 10-minute time frame trader, you've got levels to get involved. Obviously, smaller pips for the levels, that's okay. Okay. So let's step number one, 500 bars. Step number two, measure the highest and lowest, which we did. Step number three, measure the distance between the high and low in pips. So let's take our ruler tool, measure it, and we've got here 972 pips. So we multiply that by 3, and we've got here, take my calculator on my phone so that I don't have to interfere here. We've got 972 times 3 is 2916. So we take 2,916 pips, and we divide that by 2, which equals 1,458 pips. And we take 1,458 pips, and we divide that by 10, and we get 145 pips, okay, is the distance between levels. Now, the cool thing about this is that we love the fact that we now know this. The thing that scares traders at first is like, ooh, well, wait a minute. So if the market goes against me, I'll be losing 145 pips before I get back in? Yes. But what you got to remember is that, and yes, Luana, it's also with 0.15. You can do that as well. The reality is, don't worry. And I know it's difficult to comprehend this if you're not making a lot of pips right now or if you're not making a lot of money in the market. But I'm saying this with all honesty, with all due respect. We're all adults here, okay? And you're going to have a proper equity management plan anyways. So the market going against you doesn't matter. I know it's tough to understand that or to kind of comprehend that, but type in a yes if that makes a little bit of sense to you, that even if the market goes against you, you will be okay. You're going to have a hard stop. You're going to have a hard limit. And if you're used to trading a mini lot or a couple of micro lots, that doesn't mean that every single trade is going to be one mini lot. You can diversify, because for every mini lot, there's 10 micro lots. So you're going to be sizing in, and it's not going to be painful. I promise you that. We're not going to rip duct tape off your legs. It's a small little bandage that's not sticky. Okay? It's a controlled expenditure. Maureen, beautiful wording. Thank you. A controlled expenditure. It's an overall plan, folks. Okay? And sooner or later, what you're going to realize is that, why didn't I know about this earlier? Why haven't I been trading this way since the beginning? That's really what's going to take place here, okay? So now that we've identified the levels, okay, what we need to do here is we need to put the levels on the screen. So can I delete the wording now on the screen since we know the levels? Type in a yes if I can delete that. Okay, so I'll delete this. What I'm going to do here is let me go ahead and copy this and put it in the chat room so that way, no matter what, I don't have to rewrite it. And that'll be a lot easier here. So let me know if everybody got that. Type in a yes if you got that. Okay, cool. So now I can delete it, and it won't make a difference. Okay. All right. So 145 pips is the distance. So now I don't need this line anymore. I don't need this line anymore. Don't need this. Don't need this. Now I'm going to right-click on my charting software, and everybody here that's already signed up will get this in mid-May, right before the class. You'll get the upgrade to your charts, which will include now the matrix. When you click on the matrix, the beautiful thing about this is, as you can see here, you now have the capability of setting up levels above and below your current entry point to go ahead and make sure you get taken in. So here's how this works. How many levels? Josh is going to show you in class, because again, the class is hosted by Josh Martinez. Okay, and you know Josh, leveling strategy. I mean, he's already got leveling strategy down to a science, and he says that leveling course students, mastermind, and target traders all need this, regardless, to get even better at what they do, and that's phenomenal. We're going to show 10 levels. Now, again, you can do 1 or 2, but I'll show you 10 just to kind of show you how this works. Lots per level. Right now, every level that gets taken in is 1 micro lot. You can change that if you want, but again, like for example, I can change it to 5 micro lots. I can change it to a mini lot. So you can control the lot size for the levels, and you'll have an equity management plan. Distance between the levels is 145 pips. Okay, 145 pips. Pending orders, I can place them only above the market, one-sided below the market. Okay, so if I wanted to get in at a buy low price point, I can place trades only below the market price. So that way I can get taken in as it retraces. I'll show you both sides right now. Okay, and since we're believing the market's going to go up to the north, 300 pips, we're going to buy, not sell. A couple different ways to do this. You'll learn a hard stop, which you can place right here for protection, and a hard limit for protection. So you'll have your stop and limit that you'll have according to your equity management plan. For now, what I'm going to do is I'm going to show you just how to make 145 pips at a time. If that makes sense, type in a yes. Like if I set my limit to the D extension, my limit will be there. If I set my stop to a low, it'll be there. You'll have a risk versus reward ratio. And from what I've been told by Josh is that there's 3 different strategies: swing, position, and scalping. All going to have different size stop losses. So that's why this is here, just so you know. But for now, I'm going to go ahead and click on where it says close all orders on net pips. So that means I want the market to give me 145 pips at a time. So whenever the market gives me 145 pips, it'll close me out of the trade. So essentially, I really don't need a stop or a limit, because once I make 145 pips, it's going to close me out net. Type in a yes if that makes sense. Closes me out net position. Okay. Now, I always recommend stop loss and limit, but Josh will show you and explain to you why all this is the way it is. So when you click on OK, that's all you're going to do. Now we've set our trade up, click on it, and there you see the levels of the screen, the levels of the market. And so from here, okay, the live market, we're in a trade right now. If the market goes up to the next level, guess what? We made 145 pips, and we're closed. And then we re-enter the market. And if it goes to the next level, we strike the D extension, and the next level, 145 pips net. If it retraces against us, what's the worst thing that can happen here on this move? These are all 145 pip levels. So if the market, okay, does this from our entry, boom, then we'll be sized into the market once again. Okay? But Jose, then what if it does this right here again? Boom. We'll be sized into the market once again. So you're telling me both my trades are down? Yes. But guess what? When this trade right here in retracement at a buy low begins to climb and does this right here, that means that this trade right here, your second trade, is now at break even, and this trade just made 145 pips. So that means you're now only down 145 pips. So when the market here goes back up, like this, now this trade is break even, and this trade made 145 pips. So there's your net 145 pips. You're closed out for profit right there. Type in a Y or a yes if that makes sense. 145 pips, net, you're done. Okay? To give you some back testing proof of this, I want to show you this on all the currency pairs because we have the targets of the pound breakout prediction. So you can see right here, what we're going to do is just start with the 500 bars of memory, and I want to show you how this works here. Okay? So let's say, for example, the target to the north here is you want to go ahead and trade to the north, but you want to make 145 pips at a time. Okay? So let's say you get taken in buying right here. Okay? The market takes you in buying right there, and then it goes against you. Okay? Well, when it goes against you, hits the next line. You're sized into the market. So it goes sideways, comes up, okay, strikes the original entry, so you're at break even, comes down, comes down, comes down, comes down, goes sideways right there. There's that break even, and there's your 145 pips net. Okay? So watch right here. There's your break even trade. There's your original trade right here, I should say. So it sides you in right there, break even right there. When it struck the next level, 145 pips net for your original trade. But since our target is to still go bullish, we're going to resize into the market at this next price level. So that's our next entry. 145 pips net. Resize into the market right here. 145 pips net. Closed out. Resize into the market right here. 145 pips net. Resize into the market right here. Comes down. Also sizes me in once again. So guess what just happened here? This original trade is now at break even, right? And this size in was 145 pips. So there's my 145 pips net on that trade right there. And I'm going to size back in right here. Just made 145 pips net. And now I'm back in a new position right here. This is my newest position of the move, heading towards my bullish Fibonacci target. Doesn't matter what the market's doing, waving up or waving down. Type in a Y or a yes if you see how making a profit here by sizing in the market based off of grid trading can make a huge difference in the way that you capture pips in this market unemotionally. At first, you're going to probably be thinking, oh my gosh, I don't know about when it goes against me. Listen, the market's going to go against you when you get stopped out. You're already used to the market going against you. This is how this works, okay? And so far, if you take 145, and you multiply that bad boy by 6, look at the amount of profit you could be making. You might not be trading all mini lots right now. You might not be trading standard lots right now, but this adds up, okay? And when it adds up, your account grows. And when your account grows, guess what happens? You can begin to make more money and be more confident as a trader. 870 pips net. Okay? 870 pips net on this movement right here. And we were going after 315, so imagine making that, if not more. Pretty powerful, right? And that's how to take advantage of that here. Also, when you're using your analysis, look how the market can size you in with Fibonacci's. Everybody see how this works so far? Pretty awesome, right? All right, so everybody's got the pound Canadian. Having a yes if you do. Just showing you what grid trading can do on top of the pound Canadian. Now, let's take a look here at the pound New Zealand. Pound New Zealand's been obviously moving bullish. So we're going to right-click on that and link that pound breakout prediction target to the 1 hour time frame. And on the 1 hour time frame here, you can see where the market is in relation to that opportunity here. So essentially, okay, we can see this market making higher highs, higher lows. We can go ahead and trade via trend lines and market opportunity, and this is how we're going to do it. We're going to go ahead and zoom in and show you the technicals of this. Use some Fibonacci's. Use the automated Fibonacci's here to kind of get us in a position to start placing some trades. And let's draw some more smart trend lines here, inner, outer, and long term. And here's the most recent A-B boundary. Why is grid trading so important? Well, let me tell you this. This is a 1 hour time frame. How many of you see how the previous C to D wave movement took forever and a day to get there? Having a Y or a yes if you see that. Chicasa, we have some arrangements possible. Okay, yes, we have great arrangements for this opportunity. You want to type in your number, Chicasa? I'm going to let some cat out of the bag a little bit later in the webinar. I've got some enormous news, but if you want to type in your number now, we can speak to you if you're in a hurry, and we can talk to you about that. But we got some great news today with this opportunity. So the question is this. Peggy says, do you ever have any losses? Of course, you're going to have some losses along the way. But the key is to remember that the majority of losses comes from not knowing where to size in or where to place your stop loss correctly. And we've got professional stop loss strategy going on. We've got a lot of opportunity here for you. So Peggy, absolutely. There's going to be losses and everything. It's not 100%, but you're going to be taught how to have a high winning percentage movement to ensure you're doing things the right way. So when I look at this swing, everybody, this is the swing here. You can see it is 1.74979A to 1.81915B. Go ahead and take a screenshot of this if you want, but this swing looks pretty awful to me, in my opinion, only because it's so big and it's not offering me great risk versus reward equity management as far as a Fibonacci swing. Type in a yes and you take a screenshot of this. And Chicasa, Don, thank you for your number, guys, and girls, we'll reach out to you in a little bit. So it's very difficult to take advantage of something like this with an A way down here and with a D right up here. So first of all, we've got this, market opportunity showing us that the D extension is at 1.86201. And with the D extension at 1.86201, let's color it red, right? We know that this market here is heading towards that D extension, so we're anticipating this market, if it wants to stay bullish, right, because we've also got an inner up trend line here that would be drawn, inner smart trend line across the recent up ABC. As long as it stays above the inner up trend line, we've got opportunity here to continue trading towards that, but this is about anywhere between 130, I'd say about 150 pips to the D and about 400 pips to the pound prediction target. Okay, so we have the pound prediction target. And we have the 60-minute D extension here right below it. So in a situation like this, right, what are we going to do? Okay. Well, and education specialist, if you can answer Tim's question and help them out, that'd be great. Here, we're going to do is open up the same currency, pound New Zealand, on a 1 hour time frame. But I'm going to put 500 bars of memory here just to kind of give you the comparison side by side. 500 bars. And since I wrote up the steps already, all right, very simple. Let's go ahead here and, let's link these lines to that 1 hour time frame. Where is it? 1 hour. Pound New Zealand. What's the next one? There we go. So we have here 1.8. 6201. Color it red to match the extension. And then we have the pound breakout prediction target, which is green. And we'll color it 1.88680. So now we have the same targets as the 1 hour, but with smaller bars of memory. And again, this would be the highest point of the chart right here. This would be the lowest point of the chart right there. So let's just measure that real quickly. From the low to the high, that's about 841 pips. Okay, so with 841 pips, let's do the calculation. 841 times 3 equals 2523. Divide that by 2. Divide that by 10 is 126 pips. The levels. So we'll go into the matrix, open that up, and we see here that, and again, you can put as many levels as you want. Josh will show you the difference. 126, okay? And Stephen, I agree. Why not do it by 0.15 instead of the same 3 steps? But I'm just following the steps so that I make sure that I follow the rules as far as instructing. I've been instructed to do it this way. So if I take any shortcuts and do something else, I don't, even though it's logically the same, I don't want to have any headaches from anybody later on. But I have to be compliant with what I'm supposed to show, just so you know. So 126 is the grids. We're looking to buy because the market's bullish. We can play both sides. And let's just say we want to close out every time the market hits 126. And click OK. And now we have our grids here for this movement since we're anticipating to go to the north. So 126 pips is what we'll be looking to make. And again, by looking at this, here's the reality of the situation with this chart so far. You can see what's been taking place here. Let's just say for the purposes of demonstration, I know this is the past, but you can see how it works. Let's just say we got taken in buying right here, okay? Well, we got taken in buying right here. It came down, came up. There's 126 pips net right there, okay? And then we'll resize into the market buying right there when it strikes it. And then we go sideways right there, rally, go sideways, boom, right there, it struck it. Another 126 pips net. Resize into the market. Market comes up, comes down, takes us into another trade. Okay. And it comes up. This trade right here becomes break even right there. And this trade right here makes 126 pips net. So your trades are break even and 126 pips. So 0 plus 126, 126 pips net. Then we resize into the market, right? Right, because this trade was break even, 126. We resize into the market right here and make another 126 pips net immediately. And resize into the market right here. Make 126 pips net immediately again. And then size into the market once again right here. And 126 pips net. and then get back in the market right there. And right now, we would just have made 126 pips net. And so now we're back in the market live, looking to take advantage of the market. As the market's climbing, you see how you can make money when the market's going up and or if it's going down against you? Type in a Y or a yes. Because once your original trade's at break even and the other trade's making profit, you're closed out net. This is for someone who doesn't know much about trading and wants to capitalize on some big movements. So we've got 1, 2, 3, 4, 5, 6, 7. 126 times 7 here. 883 pips net. Net. And we'll go ahead and make this pretty large for everybody to see it. But beautiful opportunity there to show you how you can be making a profit while all this craziness is happening here of AB boundaries. Okay? Wonderful opportunity here, and it's the newest technology to take advantage of. Pound Japanese yen. Okay? And with the pound Japanese yen, we have the monthly target to go after. Let's right-click and make sure we link that object from the monthly to the 1 hour time frame. On the 1 hour time frame, you can see that the pound Japanese yen's target is far away. We've also got a trend line break that's been taking place in the 1 hour time frame here from this high. Got a trend line break, so the market's climbing, making higher highs, higher lows. Okay, so obviously on the 1 hour time frame, the market may look to come back towards the backside if it wants to test that. We'll see how that works out over time. But for right now, let's zoom in. As long as the market here is climbing, let's draw our smart trend lines, long-term outer, and we have outer, inner trend line can be drawn as well, very tight there if you want, but this would be probably the best way to go about doing this. And so now let's go ahead and utilize our smart fibs. You can see here the market gave us fibs that were traced, and then now we have a new up AB swing. And so obviously we have closer targets than that way big target up there. And so the target on the 1.618 would be 143.815. And from the live market, that would be here upwards of about 150 pips away from the most recent movement. So the thing is, the market can U-turn, come down, and then take off. We might not be in position to buy when the market's there. So why not have the market retrace against us if it does, and as it's waving before it even rallies, we can still make as much of 152 pips, if not more, along these types of movements. So this is what this looks like right now on the 1 hour time frame. If you want to type in a Y or a yes when you have this screenshot of the pound yen. And so what we're seeing here is that opportunity there. Take advantage of it. And Gary, if that's the case, then you can go ahead and begin to place sell grid trades for whatever target he's looking for as far as chief. So it's going to be a wonderful way to go ahead and utilize the strategies of professionals, but also have the power in your own hands. So it's awesome, awesome stuff. So now let's open up again the pound Japanese yen on a 1 hour time frame. And let's go ahead and put 500 bars of memory on here. And as you can see, I'm going to go ahead and mark off the D extension that we have so far as 143.815. Let's see. Sam, it could be fair to say that, but with this, it's more, there's more opportunity to get involved. but I would say there's a comparison, absolutely. So what we want to do here is go ahead and compress our charts. This is the highest point. This is the lowest point. So let's measure it. And that is about 695 pips. So let's take 695, multiply that by 3. We divide that by 2, divide that by 10. 104 pips is the distance between levels, 104 pips here. So if we're looking to still buy the market towards that D extension, okay, then we'll have different levels to take advantage of. 104 pips is the move. We go both sides of the market to buy, and if we want to close out our trades on 104 pips each time, we can do that. And we have the levels there of the market. And as you can see here, keeping things easy to understand, keeping things easy to execute, easy to obey, are going to be a wonderful, wonderful opportunity here. So let me show you what this market's been doing, right, if it goes against you and you have buy opportunities. Because look how the market was going down, right? So the market was going down here. Let's say you got into buy opportunities here. Okay, let's zoom in and show you how this works when it goes against you, just so you guys can see how this works. So here, for example, let's say this is our original buy trade of the movement right here. Let's just say we bought the market here, and we want to make 104 pips net. Well, by buying the market here, once it strikes this line, there's 104 pips net right there that we made. Okay? Done, easy, no problem. Okay? Then we resize in the market right here. Well, by getting involved, we almost make 104 pips, and the market goes sideways, and it comes down, and it takes us in, resizing the market. So now that it goes against me here, right there, this is my new trade right here. Okay, so let me go ahead and put a oval over it. This is my actual live trade. The other trade was closed out for profit. This one's still in. Comes down, strikes this line, so I get taken in or sized in once again, right here. Then it goes against me again, and I get sized in right there. Okay, so now I got 3 trades in. As this market climbs up to make 104 pips, guess what? My second trade's break even. My first trade's almost break even. Okay, so I'm almost up 104 pips altogether. Then it goes sideways, goes back down, goes back down, goes back down here. So I'm still in all 3 trades. And it comes down and takes me in and sizes me in again, right here. Okay, so this is the original trade right up here. We'll go ahead and color that line black. Right there. So I'm sized in, sized in, sized in. So right there, the market makes a break-even trade. Check that out. This fourth trade breaks even this trade right here. Then this trade right here breaks even this trade right here. And then this trade right here breaks even this trade. So I've got my 104 pips net done. Having a Y or a yes if that's not magnificent. Talking about magnificent, even when the market goes against you, you have the option to have a strategy to help you out via the retracements because the market's moving a wave pattern. And you're sized in according to the equity management. Okay? So 104 pips net, locked in. Then, when the market finally reaches that net break-even trade there to get you 104 pips, then you're resized into the market once again with a brand new trade. And as you're going up, there's 104 pips net right there. And you're resized into the market once again. Comes down, takes you into the trade. Right here. Not only did you break even, but you made your 104 pips net right there, and you would have gotten back into the position right here. Another 104 pips net immediately. Then you would have gotten involved once again in the position right here. Market goes against you. Get resized into the position. 104 pips and break even. That's 104 pips net right there. Then you're resized into the position. Just made 104 pips net. And now we're in a position right now live to continue this incredible movement towards our target. One, two, three, four, 5, 6, 7. 104 times 7. Even in a retracement area, 728 pips net. Did everybody see how powerful it was when the market went against us? This is why this is going to be an opportunity here like never before for traders worldwide to just dominate the markets and take advantage of these market landscapes. Okay, to fulfill all of this right here, this was what was it? This was probably March 29th. So I would say over the last 20-25 days. So if you're looking to make 500 to 1,000 pips a month, this will definitely be one of those things to get you taking action with. And you can see how this would be a benefit as well in Fibonacci analysis. Okay, AB boundary, you don't want to wait for a trend line break. It'll take you in, size you in, and head to the D extension. Andrew says, Jose, the biggest thing I struggle with is direction. Any recommendations? Yes. My recommendation is listen to what Josh Martinez is going to be showcasing in the class to help with overall market direction and establish that entry opportunity. Okay, so wonderful, wonderful thing to be involved in this. So last but not least here, we've got the pound Australian, and let's link that target to the 1 hour time frame and also the 15-minute time frame, but the 1 hour time frame for right now. And as you can see here, there's the target price. And as you can see here from the live market, to get up there, about 1,200 plus, almost 1,300 pips to take advantage of. Okay, Devin, it's all going to be in the matrix, so you'll learn how to deploy them automatically or to go ahead and also do it manually. You'll have the choice, I believe, to do it automatically or manually. And so as we're doing this information right here, okay, what we want to focus in on is how to take advantage of this. We didn't skip the Australian US dollar, Judy. Today's the pound breakout prediction trade planning session, so we're just going over the GBPs today. I didn't have the Australian US dollar open. I will tell you this, though. If you were in the webinar yesterday for the Australian US dollar, we did analyze the Australian US dollar and talk about where it was and what it's doing. And where's the 1 hour time frame for the Australian US dollar? I did have it. The market fell about 35-40 pips since yesterday's webinar as we anticipated it. So, you know, it wasn't a big move, but we got some good pips on that. Okay, so this is the pound Australian 1 hour time frame, and as you can see, this market here is making higher highs, higher lows after it broke from the lower lows, lower highs. It's been climbing. So by climbing, you know, we're going to do some normal technical analysis here and keep things easy to understand, easy to execute, easy to obey. We'll draw our trend lines, inner, outer, and long term. And as you can see here, what we've got in our hands here is a counter trend line break, and if this market's looking to climb, it can also retrace back to the trend line, obviously, but if it does, that's be a beautiful size-in opportunity to get to the next move. So let's utilize our Fibonacci's and see where we're at with Fibonacci analysis here. And if we click on the auto fibs, here's the auto fibs helping us along the way. And I believe it took out the A there with that move, right? I would venture to say so. Yes. So start from the lowest point once again. And here's where we're at right here. And taking advantage of these markets. Market came down. And this is the beautiful thing about sizing in as well. Imagine if you were sizing in with this most recent move. Very shallow retracement, you bought, and it sizes you in as it retraces, and then boom, fulfills the payment. Here's where we're at right now with this most recent move. AB boundary, if it continues to rally, 1.618 would be the target at 1.72021. So if you want to type in a wire yes when you have a screenshot of this, this is the 1 hour pound Australian most recent AB boundary. Okay. And in this case here, let me see if I can just open up. Let me see if I can just make it 500 bars and still keep the fibs on there. Okay, so still kept the Fibonacci's, and now we've got 500 bars of memory here so far with everything we've done. So I'm not going to open up a new chart. I'm just going to keep this like this. And obviously the highest point of the chart is right here. The lowest point of the chart is right here. So we measure it. And it's about 931 pips. So we take 931, multiply that by 3, divide that by 2, divide that by 10. 139 pips is the distance between the levels. So let's go ahead and put the 139 pips as the distance between the levels. Close out net profit at 139 pips whenever we make it. We'll go both sides of the market to buy and press OK. And those are the levels in the market right here. So as you can see, most recently we struck a level and would have made 139 pips right there. So here you can see how this market has been assisting you with these Fibonacci levels, Fibonacci and also the levels of the grids. It's just going to be a wonderful opportunity here to continue making profit, hand over fist as far as the capturing pips. And capturing pips is an art form, ladies and gentlemen. So right now, I don't want you to focus on the money. I want you to focus on the art form. And then once you get that, it's going to be a wonderful opportunity here. There's the D extension. So let's zoom in and see what this has done since over the last 30 plus days, less than 30 days actually. So let's say the market here gave us a buy entry and we bought the market right here originally. This price point low comes up, strikes 126 pips. No, 136 pips. Yes, no, 139 pips, I'm sorry. 139 pips net right there. Then we get sized in once again, right there, and retraces, another 139 pips, capitalized on, and we resize into the market right here, comes down, makes 139 pips net, resize into the market, and nope, not yet. Right there, makes our 139 pips net, and we resize into the market right here. 139 pips net again, resize into the market right here. 139 pips net, resize into the market right here. Market comes down, takes us in also, excuse me, takes us in also right there. So our original trade right here that we have in, we're now sized into a second position. The second position pays out 139. Our first trade's break even. So we made 139 pips on the trade. And now we are back into the market once again there in a trade position right now heading towards our target. How many of you see how simple this can be? When the market goes against you, still making pips. 1, 2, 3, 4, 5, 6, 7. 139 times 7 here. This would be 977 pips net. So this is a huge opportunity here, a huge opportunity to capitalize on market movement and take advantage of these markets before the markets take advantage of you, and to begin utilizing skills like this because the market's moving away pattern. right? And so if you're used to placing counter trend line breaks like this, and the trend lines break and then keep going against you, or you don't know whether to draw your counter trend line like that or aggressive, right? You don't know which way to do it. This is the next best thing to help you enter the market throughout the natural waves of the market. The market moves in a wave pattern. Naturally, this is the way to do it, because any one of you who wants to win 70 to 90% of your trades by taking control of the wave movements, this is a must, because this works not just on any currency pair, but on any time frame. I'm showing you 1 hour charts, but this works on all time frames, okay? All time frames. It's a wonderful, wonderful opportunity here to capitalize on that movement. And again, help you take advantage of these markets before the markets take advantage of you. So how powerful is this? Type in a Y or a yes if you love what you see so far in regards to taking advantage of these movements via grid trading. Right? Pretty awesome. Okay? So we've got here an incredible opportunity here for traders worldwide to begin dominating the market landscape, capturing the amount of pips they've wanted to capture, but also, okay, to keep things simple, easy to understand, easy to execute, easy to obey. Okay? Big pips are being made, big opportunity. So how do we go ahead and benefit from this in the long run? In the long run, well, it's going to be a very, very valuable tool to capture the wave movements in the market and to perform this type of strategy on any time frame. So if you've got to go to bed at night, you want to place a 15-minute chart, you could do that. If you want to find out, what the levels are and trade a 2-hour chart, all this is going to be a wonderful, wonderful opportunity for you to continue trading this method. But what I want to do is I want to cover, the 15-minute time frame here as well with a pretty cool strategy. But this is what I want to do. Before I go into the 15-minute strategy, how many traders here in this room currently do not have the grid trading course? Type in the word no. If you do not have, or you haven't purchased it, or you haven't been involved in it, type in the word no, because I've been given the green light here to do something, and then I'm going to show you the 15-minute time frame strategy I wanted to show you. First off, let me go ahead and let one cat out of the bag. As far as the 15-minute strategy that I'm going to show you, everybody who's already enrolled into the grid trading course, you'll be able to contact your account rep later today, and they'll be able to give you this strategy. They'll be able to give you this system that I'm going to show you if you don't have it for free. Thank you for investing in yourself. If you don't have the grid trading course, okay, then listen to me very carefully. How many of you here would like to have access to this tool, this matrix tool, the grid trading course? How many of you would like to have access to the grid trading course matrix here on your charting software for life? Not a subscription or an extra fee, but just for life to have this tool in your charts instead of a monthly maintenance fee. Okay, that's one thing I'm going to do for you today. Today is that everybody that signs up today, we have less than 100, so I'm sure we can get this done for everybody today. But if you are going to be payment plan or full-time payment, whatever the case may be, we're going to give you lifetime access to the tool. Second big announcement, ladies and gentlemen. Okay? We have payment plans available if you need it. You can do a one-time payment, doesn't matter. The second big announcement that I want to do right now is the following, and I'm going to show you the 15-minute time frame. The second big announcement, ladies and gentlemen, are you ready for this? Okay? Is that today only, everybody who types in their telephone number is going to be able to receive, check this out, lifetime access to the Matrix tool and a 30-day money-back 100% satisfaction guarantee, meaning if you're not satisfied with this in the next 30 days after the course starts, you can return it at no cost to you. What you need to do right now is take advantage of this before this never comes back. Type in your telephone number right now. I'm going to give everybody here 1 minute, and then I'm going to go to the 15-minute time frame and show you the strategy, which you're going to get as a super bonus today. So let me go ahead and put my timer on the screen here. For 1 minute, I'm going to give you access to this 30-day money-back guarantee. So Think of it. You'll have lifetime access to the grid, lifetime access to the matrix tool, and you'll have a 30-day money-back satisfaction guarantee for this opportunity. If you're not making money, if you don't like it, if you don't believe it's for you, you can return it and get all your money back, whether you did payment installments or a one-time payment. And I can tell you right now, this is an incredible offer, folks. Now, I see so many telephone numbers coming through that it's going to be hard to call them all out. If you're typing your telephone number right now, I see it, okay? I see it. Trust me. So we've got 43 seconds in. We got 15 seconds left before I go show you the 15-minute time frame, ladies and gentlemen, to help you take advantage of these markets. Richard, I see you. Pam, Yabert, Lilia, everybody that's typing their numbers in, I see you. It's overwhelming. Thank you for the confidence. But again, it's a smooth opportunity to kind of ease your way into this and trade live with Josh and have this wonderful opportunity. So keep typing your telephone numbers in as I go back to the 15-minute time frame and show you the strategy you're going to get for free today, okay? Same methodologies that I've looked at here as far as AB boundaries, you know. Jitesh, I believe so. So you may want to ask your account rep, but I believe so. I wouldn't see why not. Let's go to the 15-minute time frame charts here and open them up. 15-minute, 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 and should have one more 15-minute there. All right. Let me take the grids off the 15-minute time frame because it was linked on there. Show the pending orders. Take that off. So I'm going to show you the strategy here using man versus pips. If you don't have man versus pips, today with your enrollment, you'll get it for free, and you'll get this strategy here for free as well, which is just a wonderful opportunity here to just give you more ammunition. You know, I'm a coach. I'm a Little League baseball coach, and I love having plays up my sleeve for different scenarios. And although grid trading pretty much solves a lot of problems, why not have a different play also as a bonus and to help you out, right? So again, let's go with pound Japanese yen first. Man versus pips is a very simple system to follow. You can make a lot of profit off of it. Okay, I'm going to give it to you for free, but the strategy I'm going to show you is this. Okay, every single day, if you have your target, your destination. So in this case, there's the pound breakout prediction target. Let's just say you had a 1-hour time frame D extension or any kind of target that's closer. The strategy is simple. Two different strategies. You have a computerized trend line which separates the market, buy zone above, sell zone below. If your target destination is to the north, let me show you an easier pair that has a closer D extension. Here we go. Pound Canadian. If your D extension is to the north, do not focus on selling the market when it's below the computerized trend line. That's a stay out area. Your objective is to make it to that D extension. So with man versus pips, all you're going to be doing here is taking on all of the buy signals above the computerized trend line and getting out with the red. Buy the green, get out with the red, buy the green, stay out below the computerized trend line, and only take on buy trading opportunities in the buy zone towards your destination. Having a Y or a yes if that strategy makes sense as far as trading from C to D, only in the direction of the movements. No matter what time frame you're looking at, beautiful opportunity there. You'll get the rules for that, okay? To repeat that, Jocelyn, let me show you what I mean by that on the pound Canadian 60-minute time frame. Where's the pound Canadian 60-minute time frame? There we go. Pound Canadian 60-minute time frame here. Right there. We have, and let me take the grids off the chart real quickly. At least they won't be off, but you won't see them. The 60-minute time frame, we've got an A, B, C to D. So once you establish the direction of the swing, C to D is where you want to trade towards. You're just trading man versus pips from C to D. Okay? So from the 1-hour time frame, you're looking at the C to D wave movement, and then you break it on down to the 15-minute chart, and you begin to trade from C to D, only with the green buy entry opportunities. That makes sense? Now, the next strategy I want to show you with this is a European session strategy, and it's the strategy I used to trade all the time when I was an analyst on demand. And for those of you that followed me on Analysts on Demand, I was one of the first analysts on demand. It was myself and Joshua Martinez. We were the first analysts on demand, and Jeffrey Watkins. So it was us three doing AOD when it was first created. And the strategy I used when I wanted to send out trading alerts was man versus pips. And since I was in the European session, this is how it would work. Every single day at the beginning of the European session. So, for example, the European session starts at 2 a.m., right? So every day at 2 a.m., which this is 2 a.m. right here, every morning in the European session at 2 a.m., what I would look for is where is the candles in relation to the computerized trend line and what's my signal telling me. If it's above the computerized trend line and the signal is green, I would buy the market and I'd place my stop loss 50 pips away, okay? 50 pips away stop loss. And then what I would do is I would begin to place a 100 pip limit, but also have increments of 20 pip increments to the north to cancel or replace for profit. Again, I'm going to give everybody the rules to this, but there'd be 20 pip increments to take advantage of to lock in profit in the European session. So that every time the market fulfills those 20 pip increments, you're canceling your stop loss and replacing it to a higher level in the market. You're canceling your 50 pip stop loss and you're replacing it each time the market strikes these increments to take your risk away. And as long as you have the green signal, you're capitalizing on profit after profit after profit. Well, Jose, what happens like something like this? If I cancel replace and then it comes down and stops me out, what do I do? You don't just jump back in, ladies and gentlemen. You have to have a counter trend line break to get back in. Once the trend line break happens, re-enter the market, 20 pip increments, 50 pip stop loss. As long as it's green, keep the motivation and the setup going. That makes sense? Type in a yes. Okay? It's a European session strategy. That's why, because it's faster in the European session, but it's so simple that if you start losing big time, it's because you're letting the market take advantage of you. Because if the market turns red at any point in time, you're not buying anymore in the buy zone. You're done. You're out. Look at another currency pair that's doing the same thing you got to be doing according to the rules and trade that. Don't be going after, don't be trying to beat the market or stay ahead of the market. You got to think about it. Okay? So what I'm going to do is I'm going to do the following. I have this all written out in detailed instruction for everybody who enrolls today, everybody who's typed in their telephone numbers to sign up for the grid trading course. You will go ahead and receive these two strategies I've just shown you today for free, the system for free, and the 30-day money-back guarantee also with the grid trading course for free. If you have already signed up for the grid trading course, I want to take care of you and say thank you for investing in yourself. Contact your account rep today sometime, and we'll make sure that you get the same strategies I just mentioned for free because you've already enrolled and you've already invested in yourself. Type in a Y or yes if that's fair, and if you like that. Taking care of everybody here who's signed up already and giving you the option who hasn't signed up yet to take action and do this. So here's how this is going to work, okay? To kind of show you what I mean about how this works and what this is all about. This grid trading course is new trading technology to optimize any strategy you have, to amplify your results. It's a must-have if you're a mastermind student, if you're a leveling student, if you're a target trader. It's for traders that want to win 70 to 90% of the time. Who wouldn't want to do that? Investors who want to take control of the wave movements. This is for you, okay? And again, today, when you type in your telephone number, one of the big bonuses you're going to get is a 30-day money-back satisfaction guarantee. We guarantee, we're so confident that you'll love the grid trading course that if for any reasons you're not satisfied over the next 30 days from the class and you do not see long potential term, return on investment with this, we'll give you 100% of your money back. Reserve your space now though because this is only for today's webinar. And if you want the grid trading tool for life on your computer, type in your telephone number as well because we've got less than 100 of those left. And so here's the deal. Eliminate your risk with our satisfaction guarantee for 30 days. That's our plan for you. This will be a $3,495 course here in the near future. But today, it's for the low price of only $2,245, saving you over $1,250 instantly. And, ladies and gentlemen, you're going to be getting this either in installments with payments if you want, or a one-time payment. Either way, you deserve to have a vibrant and fulfilling trading career. That's why this new education you're going to receive comes with a no excuses, 30-day, 100% money-back satisfaction guarantee. And here's the red hot bonuses like I mentioned earlier. Today, those of you that type in your telephone numbers, if you want to type in the word bonus, please do. But you're going to get 3 months access to live trading follow-ups. 3 months. That means you're going to be trading once a month with Joshua Martinez for 3 months to give you that trading opportunity that you want with this great trading course. Bonus number 2, okay? We have less than 100 of these left, and then this bonus is gone, is lifetime ownership of the Matrix tool. As long as you have charting software, you'll always have the Matrix tool. So for those of you charting software students that have lifetime charts, this is a no-brainer. You'll have your Matrix tool on there for the rest of your career. Okay? Everyone else, after these 100 are gone, are going to be charged a monthly maintenance fee. Is it worth the monthly maintenance fee to have this tool? Absolutely it is. Absolutely. But today, you can usurp that and never have to pay for this tool ever in your life and have it on your charting software. So if you want this, type in your telephone number with the word bonus, ladies and gentlemen, because we want to assist you in making 2017, okay, your most profitable year ever, okay? Your most profitable year ever. So not only are you getting the grid trading course, everybody, but remember, not only are you getting the grid trading course today and 3 months of follow-up and lifetime ownership of the tool, you're also going to get 2 different strategies with my man versus Pip system to help you kick the European sessions, you know what, and to help you trade from C to D beautifully and effectively with equity management. Hey, consider this MVP's playbook. I'm letting you in to my playbook, and you can begin to call the shots. So I see Lulio for your telephone number. Thank you. Justin, Bernard, thank you. Terry, thank you. Richard, thank you for your telephone number. Sean Dale, thank you for the kind words. John, thank you for the kind words. Tim, thank you for your number. David, Ted, Dennis, thank you. We've got Moshe, thank you. We've got Dave, thank you as well. We've got Peggy, Maureen, Merlin. Everybody, there's so many numbers right now that if I didn't call your name out, trust me, I see your telephone number, but I can't, I see Ben, Roger, David, thank you. It's just right now it's too many numbers for me to call everybody's names out. So rest assured we're marking off your telephone numbers. We're marking off your names. Just remember to contact, your account reps and let them know. Let them know, hey, Jose said this, Jose said that. We're going to help you take advantage of these markets before the markets take advantage of you, okay? So what I'm going to do is I'm going to try my best to get all the information out to the account reps ASAP so that once you sign up, they'll be able to email it to you, the system and the strategy. But also just remember, as far as the tool itself and this course, mid-May, right before the class starts in May, you're going to get this opportunity. But today, within 24 hours, if not instantly today, you should be able to receive my system and my rules to train that system so that you can go ahead and at least have something to snack on before this main event course meal, the grid trading course. So everybody, again, thank you for your time. Thank you for your trust. It is 12:30 p.m. If you want this incredible opportunity today that comes with a 30-day money-back satisfaction guarantee, literally, satisfaction guarantee, type in your telephone number because today is the day where we're going to make it happen for you, and today's the day we're going to be an incredible, incredible trader moving forward. So, again, I want to thank you for your time. Most importantly, I want to thank you for your trust, and just to kind of give you some reconfirmation of what's taking place here, everybody, is that today, just so you can see this, you're going to be getting the grid trading course, all the manuals, checklists, recordings, live trading follow-ups, and 3 months extra of the follow-ups, lifetime ownership of the Matrix tool, which brings this to a $5,485 value. Today's price is $2,245, and yes, we do have payment plans available. You save over $3,200 instantly. But I'm giving you my Man versus Pip system for free, so you're actually saving $4,240 in 2 different strategies. So make sure you type in your telephone number right now. and take action, because at the end of the day, guess what? Today is the day where you're going to receive a 30-day, 100% money-back guarantee and all the bonuses I showed you today. So it's going to be a powerful, powerful, powerful time to be a trader. And we're so confident that you'll love the way this works that we're going to give you this entire program risk-free for 30 days. That way, you don't have to sit here and take my word for it. You can take it, try it out, test it out, right on your computer. Trade with Josh, utilize it the way that you see fit. Follow the rules, and you'll have a chance to see it work, and you decide whether it's the right program for you. Because let's face it, at the end of the day, the only person you're going to trust is yourself. So all we ask is that you type in your telephone number with the word bonus to get everything I mentioned today, and give it an honest effort. Okay, so let's do this together, because your timing today is phenomenal. Ladies and gentlemen, thank you for your time. Thank you for your telephone numbers. Thank you for your trust. This is Jose Tormos. This is FX MVP. Go get them. You deserve it.